Hey everybody, welcome back to another episode of Ryan Makes Sense. Today we're going to be taking a look at ticker symbol VOO and SPY, the S&P 500. We'll look at the differences between the two, look at the chart pattern, and see where the markets are going next. Let's dive in. All right, you guys, we are looking at ticker symbol VOO, SPY, and I added a little bonus in here, VOOG. That is the growth S&P 500. So the VOO and the SPY are both the S&P 500 ETF, as you guys can see here. The main difference is the Vanguard VOO has a lower expense ratio, which in the long term gives you better returns, more cost efficient. So if you are looking to invest in the S&P 500, which I normally tell people, if you're going to invest and you don't want to have emotions tied and you don't want to research individual stocks, look at the S&P 500. I do use the VOO and the VOG. I don't invest in SPY. Do your own research. Check out the expense ratios for both of those. And also I want to point out the SPY's dividend down here is 1.56%. while VOO is 1.62%, and VOO has returned 7.5% this year. The SPY has also returned 7.5%. So again, do your own research into the both. I like VOO. I am adding long-term to VOO and VOOG. Let's take a look at the charts. If you guys don't know, now you know. I look at the bigger picture and I go from there. So with all three of these charts, we're gonna look at, here's VOOG. Look at this. So we have a couple things going on. This line I keep touching, this is our semi long-term support over about 3 years now. But you can also see there's a pattern here. We have a descending wedge where we have support, resistance, support. Look at all of this support, and it happens to be on this line as well. Resistance at the top of the triangle. And now look here, the candle touched both the standalone, it touched the standalone support and it touched the triangle resistance. So that is for the VOOG, the growth S&P 500. The VOO, let's take a look at that. Similar type of setup. This is a pennant. Do some research on that, but this is a pennant where you can kind of see it's it has an expansion right here, comes in tight, support, tons of support, comes back, resistance, support. Now, is it going to break through or is it going to break up? You have to look at the macroeconomic events that are going on right now. We have record debt. We have student loans resuming. We have worldwide turbulence. We have potential WW3. Who knows? I don't know. But we also have this. Businesses are reporting out really strong numbers. So again, do your own research. Come to your own conclusions. But I am a long-term, I just, no emotion, just put your money in long-term. Over the past 100 plus or almost 100 years, the stock market's been through world war, terrorism, financial crisis, pandemics, presidential assassination, both Democrat, Republican presidents winning. It's been through literally everything. And throughout all that, it still returns between 7 and 12%. Some years are better than others. Like look at here, 2020, March of 2020, the stock went from 200 all the way up to 438 in 2 years. That's over 100% in 2 years. So again, this is VOO. This isn't a stock, it's ETF, but you know what I'm saying. So again, we have a pennant on VOO. The SPY, it's the exact same thing because the VOO and the SPY are literally the exact same ETFs, although the offering, the Efficiencies are better with Vanguard. Do research. So that is what I wanted to show you guys, and I'll do another bonus on here as well. What happens if you put, let's see. What happens if you put $5,000 into the stock market in 2023, and every year you just add $1,000, and the dividend yield is 1.62% for the VOO, and every year it's going to go up 7% conservatively. If you did this for, let's see. If you did this for 50 years, just $5,000 starting out this year, and then $1,000 every year after that, that's pretty doable, right? You could be looking at $1 million in your account, which is awesome. If you do, let's say 10,000 here, and you do 5,000 every year, same thing VOO, you could be at 1 million by 2057, which is 34 years from now. Let's say the market averages 10% instead. Your 1 million could be at 2051, which is less than 30 years. It is 28 years. Lots of variables. You could put in 100,000 here. Whoops. You could put in 100,000, and let's say you don't touch it ever again. You just put in 100,000, you walk away tomorrow. If you don't touch it, and after just putting that in 21 years, you will have over $1 million. Just by it just sitting there and doing nothing. It just compounds. So again, let's do the Roth IRA. Let's say you started a Roth IRA last year, which is $6,500, and now you can add $7,000 a year. VOO, again, 2049 at a 10% growth. So again, if you're just doing it in the VOO, it's returned historically between 7 and 12%. 7 figures by 2049, 26 years. So, I mean, do the math. Whatever age you are now, at 26, add this year, and then add 26 years. But you've got to put in your Roth IRA maximum of $6,500, and then next year you've got to put in 6,000 or 7,000. If you're over 59, you get to add, or 50, I think you get to add a bit more. I would do some research on that. I always forget the threshold, but again, the S&P 500, top 500 companies in the U.S. Think about it. That's all I had for this video. Today is the last day of October, So by the time this video comes out, it'll be likely mid-November because I'm going to be traveling and I'm not going to be able to record. So yeah. That's all I have. If you guys made it this far, consider the subscribe button, hit the like button. I'll talk to you soon. Take care.